and they chose to move forward with us for $75,000 with the 100% prepayment discount addendum. David mentioned this the other day, but they accepted the offer. They took the 75, and that was on December the 23rd. All right. Well, listen. Um, I just want to make sure everybody understands how the whole system works. I know you do because you're pros, but our lenders on the Bank Greasy platform, they all determine the client's funding amounts. It's never determined by us and what the factor rates are, and they do all that by assessing what the business financial health looks like through cash flow, and primarily they evaluate overall revenue as this produces insight into the business's ability to actually repay it. And then it talks about lenders also consider the length of time they've been in business, the industry type, what kind of existing debts or financial obligations that they may have. And ultimately, the funding amount is tailored to each individual business based on an awful lot of different factors. But the pro tip of the week is, people are asking, why is it that I submit a file, they're doing this amount, and I'm getting 25%, not even 50% of their monthly revenue? I want to give you some factors that come into play. Number one is the credit profile. If it's really, 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 really bad, or even not so great at all, and it's not extremely bad, that's going to determine how much that each one of these lenders are going to risk. Of course, the industry type makes a difference, whether it's trucking, real estate, or a healthcare facility. The number of positions is a big one, and we're going to talk about that in a few minutes. The number of deposits, we have one today. I'll tell you a little bit about on their deposits, and then of course what their daily balances are. When it comes to FICO score, if it's below 600, it becomes a higher risk funding for almost every lender out there. So they're going to take that in consideration when they're looking at the file to see whether or not it's going to be 100%. And here are some of the high risk industries that are out there, like transportation and trucking is probably number one. Real estate, seasonal tax preparation, where they don't do any other type of accounting, they just do it during that year, that season. Consulting, when we don't really know what the consultants are doing, we have to get more information before we submit it to be able to get a better look. But if they're doing 50,000 or higher, that's okay. Anything in energy and solar, because these solar companies pop up and go out of business very, very quickly. Credit repair companies, especially if those companies aren't legally compliant with the federal regulations for them. Certain financial services, and of course, family farms. These are all high risk ventures. So that makes a difference in whether they're going to get 100%. Then the number of positions. If our funding is a second, third, or fourth position funding, which we do all the time, then all the other positions that are ahead up can really factor in what they really can afford to pay. So if their debt to income ratio on just the funding, not on all their other bills, is 35% or more of the total amount that they're doing in monthly revenue, for example, if they're doing 100,000 a month in revenue and 35,000 of it's going to pay back positions in the system, then that's going to create problems, and that's going to determine really how much they're going to be able to afford. And then, of course, number of deposits. A lot of our lenders, well, almost all of them require 3 to 5 deposits. The A lenders, they'll take a minimum of 2. Some of them require 5. And the reason you want that is because I had a situation today. Their deposit didn't hit for the month of April, but it went into the month of May, and the month of May is huge. But because it didn't hit in the month of April, they really could not. They only had like 11,000 in revenue, and they already have other positions, so they really for that month couldn't afford it. Fortunately, they have such high balances on a daily basis. It was able to cover all that. And it's not an issue, but daily balances is a big deal. A lenders like to have 1,000 in daily balances, but I want you to look at this. These are the May bank statement of a business that they were wanting to get. Let me make sure there's nothing to identify this business, and there isn't. They wanted to get in a funding of $50,000. Well, you're looking at their May bank statement summary.